Well, overall confidence of asset managers rising marginally in the second quarter from 83 index points to 85. However, this marginal increase disguises very different confidence readings. That's between small and large managers. Let's unpack the latest from the survey on asset management. Ernst & Young, we're joined from Cape Town by Chris Sickle, Asset Management Lead Director at Ernst & Young. Chris, thanks for joining us today. Let's get into this because large firms have got confidence sitting at a 2.5-year high. So firstly, tell us all the dynamics that have helped to boost confidence for large asset managers in South Africa.
So, hi Samantha. Yeah, so for the large managers and for the small, we look at fundamentals really, and part of those fundamentals is looking at their revenue, their income and their expenses, and then we also survey the inflows of new money coming into the business. And I think the last quarter has shown a significant increase in that inflow growth to managers, large and small, but more so for the large managers. And that growth comes from institutional clients as well as retail clients. So that would be boosting a lot of the confidence at this time.
When it comes to income patterns right now, tell us how profit levels have differed between the larger firms and the smaller firms.
So the profit levels have, I think, in Q1, the smaller firms have seen significant inflows, which was a lot better than the larger managers. But I think in this current Q2, they sort of normalize. There's still a lot of volatility in the operating profit. I mean, that's fair to say. But at the end of the day, the profit is really generated from base fees, and I think the base fees largely because of the market. The JSE has held up nicely. So when you're calculating your base fee, you actually received a proper return. On the other hand, performance fees again, I mean, that's been shrinking. Those levels have come down, and that is largely due to, given the state of the market, it's quite difficult to outperform the JSE.
Looking at cost management there, it looks like smaller firms have been a lot more active in terms of managing costs, whereas costs have actually started to increase for larger firms, of course, bulking up on staff, back office support there, IT. I mean, the list, of course, in terms of those expenses can go on. So what are the key trends you're looking at right now when it comes to those costs really underpinning the larger versus smaller firms?
So we look at that across both large and small, and the big highlight from the survey is that the market and distribution costs have been cut back quite a bit. Is that a cause for concern? I mean, I don't think so. Normally these are very cyclical, and depending when you want to have a big marketing push, and that is normally towards the end and the beginning of the year.
Moving on to the actual investments, which are starting to, of course, attract money right now. Tell us about where investors have been putting their money, because if you look at some of the products, of course, low risk versus high risk products, we know that there are a lot of concerns around where bonds are going right now. Is it starting to be reflected in terms of where flows are going?
Yeah, flows are, by and large, are going to a sort of the low moderate risk products. So fixed income funds are receiving quite a bit of cash, as well as balanced products.
And of course, on the other end of the scale, are you seeing an outflow from fixed income products at this point in time yet?
No, not from the fixed income. I think specialist equity, the demand for specialist equity is not that high. I mean, the growth is slowing.